The first week of 2026 began with a seismic event. The United States launched military operations in Venezuela, aiming to capture President Nicolas Maduro and impose temporary American control. This bold move instantly transformed a regional crisis into a global flashpoint, rattling diplomatic circles and financial markets worldwide. As European markets opened, the Venezuela news dominated trading desks, injecting a new layer of uncertainty into an already complex global landscape. Investors scrambled to assess the fallout. Would this spark wider conflict? Disrupt oil flows? Upend global trade? The immediate reaction was a classic flight to safety, with investors recalibrating portfolios in anticipation of increased defense spending and heightened geopolitical risk. Governments worldwide were expected to revisit defense budgets, fueling a narrative of rising military expenditures. The Venezuela intervention became a real-world stress test for the interconnected global economy, forcing market participants to consider worst-case scenarios. For many, it was a stark reminder: geopolitical risk can reshape markets in an instant. The events of that weekend set the tone for a volatile, opportunity-filled start to the trading year. In finance, the unexpected is always just around the corner. Despite the turmoil, European stock markets surged to record highs, defying expectations of panic. The STOXX 600 index climbed 0.6% to a new peak, while Germany's DAX jumped 1%, both setting all-time records. Investors saw opportunity in the chaos, betting that certain sectors, especially defense, would benefit from the new geopolitical reality. The rally was highly targeted, with money flowing into industries poised to gain from increased security spending. This selective optimism masked a complex rotation beneath the surface, as investors repositioned for a world suddenly more focused on defense. The belief in rising global defense budgets was strong enough to override broader concerns about instability. The market's swift, decisive reaction showed how quickly financial narratives can shift, turning turmoil into opportunity. The record-breaking session on January 5th was a powerful reminder perception drives markets, especially in uncertain times. Investors who read the new narrative correctly were handsomely rewarded. In the markets, timing and strategy are everything. The defense sector was the undisputed winner of the day. As news of U.S. military action spread, investors rushed into defense stocks, anticipating a global surge in military spending. The European Defense Index soared 3.3%, its highest in months, a clear signal of investor conviction. Leading the charge was Germany's Rheinmetall, whose shares skyrocketed 7% on expectations of booming orders. The rally reflected a fundamental shift. After years of stagnant defense budgets, the world was bracing for a new era of heightened competition and security concerns. Investors saw defense companies as essential in this new order, betting on sustained growth for years to come. The Venezuela conflict was a wake-up call, reminding markets of the enduring importance of national security. Defense stocks became the market's safe haven, as investors looked beyond quarterly earnings to a changed world order. The sector's surge was more than a knee-jerk reaction. It was a strategic repositioning for a more militarized future. For investors, the message was clear. In times of uncertainty, security pays. The defense sector's rally set the tone for the rest of the market. While defense stocks stole the spotlight, the market rally was more nuanced. Technology and basic resources also posted strong gains, with the European Tech Index up 2.3%. Investors bet on innovation and industrial growth, confident that these sectors would thrive regardless of geopolitical tensions. In contrast, the energy sector dipped 0.2%, as analysts downplayed fears of a major oil shock from Venezuela's crippled infrastructure. Mining giants like Glencore and Rio Tinto rallied on rising copper prices, signaling optimism about global industrial demand. The divergence between sectors revealed a market thinking strategically, rotating into winners and away from laggards. Investors were not buying indiscriminately. They were making calculated moves based on the new world order. The day's action was a study in selective optimism and tactical repositioning. In every crisis, there are both winners and losers. The tech sector's 2.3% surge wasn't just about global turmoil. It was fueled by industry-specific optimism. Dutch semiconductor giant ASML led the way, jumping 3.2% after a major analyst upgrade from Bernstein, which raised its price target to $1,300. This bold endorsement underscored ASML's critical role in the global chip supply chain and its long-term growth prospects. Investors saw tech as a pillar of innovation, betting that demand for advanced technologies would remain strong despite geopolitical shocks. The rally highlighted a key theme for 2026. Transformative technologies are resilient, even in uncertain times. Company fundamentals and industry trends still matter, sometimes even more than global headlines. ASML's performance was a powerful reminder that innovation drives markets forward. In tech, the future is always in focus. Basic resources climbed 2.1%, reflecting optimism about global growth beyond the Venezuela crisis. Rising copper prices fueled gains for mining giants like Glencore, Rio Tinto, and Anglo American. Investors interpreted higher copper prices as a sign of robust industrial demand and economic expansion. The sector's rally was a bet on continued manufacturing, construction, and infrastructure development worldwide. While defense stocks rose on fear, basic resources surged on hope for prosperity. The dual narrative, preparing for conflict, betting on growth, captured the market's complexity. Investors saw mining stocks as a straightforward play on global recovery. Even in turbulent times, the world still needs to build. The day's trading was defined by standout performances from key companies. Rheinmetall's 7% surge epitomized the defense sector's explosive gains, as investors bet on a new era of military spending. In tech, ASML's 3.2% jump reflected confidence in its dominant position in the semiconductor industry, fueled by a bullish analyst upgrade. Mining giants Glencore, Rio Tinto, and Anglo American all posted solid gains, signaling faith in global industrial demand. These moves told a deeper story. Investors were aligning with powerful narratives: geopolitical risk, technological innovation, and economic growth. The market's winners weren't random. They were companies at the heart of the world's most urgent trends. Each stock's surge was a vote of confidence in its sector's future. The day's action showed that strategy and narrative drive market leadership. In volatile times, the right story can move mountains. Investors who spotted these stories early reaped the rewards. With the Venezuela shock absorbed, investors are now focused on what comes next. Central banks, especially the ECB and U.S. Federal Reserve, are in the spotlight, as markets look for signals on potential interest rate cuts. Lower rates could fuel further market gains, but central banks will need a clear catalyst to act. Investors are scrutinizing every economic data point, from inflation to employment, for clues about policy moves. Corporate earnings will also be critical, as companies must now deliver results to justify their higher valuations. For defense and tech firms, the pressure is on to turn expectations into reality. The market is alert, balancing optimism about growth with caution over global risks. The Venezuela crisis has heightened awareness of how quickly the landscape can change. Investors are watching both economic fundamentals and geopolitical headlines with equal intensity. The start of 2026 has shown how markets can find opportunity amid uncertainty. The surge in European stocks, led by defense, reflected a decisive bet on a more unstable world and higher security spending. At the same time, gains in tech and resources signaled confidence in innovation and economic growth. The market's strategic rotation revealed a nuanced view of the future, with investors picking winners and losers based on shifting realities. Looking ahead, the key questions remain. Will geopolitical tensions persist? Will the global economy maintain momentum? And how will central banks respond? The Venezuela crisis reshuffled the deck, highlighting which sectors are seen as resilient or opportunistic. For now, cautious optimism prevails, but vigilance is the watchword as investors navigate a landscape rich in both risk and opportunity. In 2026, the only certainty is change.